Hello traders, it's Michael coming to you from GammaEdge on Monday, October 21st with our pre-market morning strategy and briefing session. SPX game plan has already been posted. Single stock game plan has been posted as well as the MTM model for today. So that's what we're looking at. We'll go ahead and start with that. Three pillars here at GammaEdge that we like to cover: sentiment, structure, and trend. We like to start with the trend first. Obviously, we're still up, red above cyan, so the colored ribbon is in the flip mode. We did get some weakness on instantaneous CT last week on Thursday, and then Friday we recovered where we have all complete bullish tag combos heading into today. So we'll see how that continues to play out. New highs outpacing new lows still, so market breadth still looks good, but we'll continue to monitor the CT here. We're kind of in a consolidation sideways constructive mode. You see obviously price overlaid here sideways within an overall range. So we'll see how that manifests and plays out today. Obviously want to see the CT stay above the moving averages and continue to live above the ribbon for the bullish trend to continue. SPX full complex, jumping right into this. Transition very narrow heading into this morning, which is great. Unambiguous. Spot price right now we're at 58.50, so we're just right at that level, top of transition there at P-Trans. We do see index down there at 58.35. Coincidentally, that's the JPM end of the month October short call strike. We see PGEX and COI up there at 5,900 for the full complex here. So again, watching this transition level for today, watching that 58.35 on the full complex will be important. Staying above transition, we have an opportunity to move up towards the 5,900 with significant OTM call speculation. And then below 58.35, we'd look for some more weakness down towards that gradient of 5,800, which is that round Livermore level, a significant amount of in-the-money calls down there, positive net delta. The delta balance chart for today, we do see the weak bear in the right-hand plane, understanding that is OTM call speculation waning just a little bit. Left-hand plane still strong bull. Delta balance still pegged at +1, so everything looks bullish there. The rest of the week looks good also, but just today, some weakness in the right-hand plane. Coincidentally, if we look at the SPY, we obviously have discussed this multiple times about the SPY being used as a hedging instrument, so obviously significantly weak here. So the hedge could be with puts and SPY versus staying bullish with the SPX overall. So we'll continue to monitor that. We do see the left-hand plane staying in the weak bull, but the right-hand plane is a strong bear. So the OTM call speculation in SPY has been reduced significantly since last week. GEX ratio on SPY, we see the price continue to hold up and be consolidation mode as the GEX ratio drops. Understand that the call versus puts, call is on the top versus puts on the bottom. So we either get a reduction in the call speculation or an increase in the put speculation, causing obviously the ratio to drop towards 1. But we're also continuing to hold on price. So we'll monitor this obviously with GEX ratio dropping. If this continues on down below 1, you'd anticipate that you would see price start to follow that direction as you see a weakening of the GEX ratio. But again, we've seen this multiple times, a pullback in GEX ratio, which is just a call reduction of those out of the money call speculation, taking profits as price moves up. And then we see a price consolidation and then GEX ratio recovers. We see the call speculation come in, which is obviously on the top, and then the puts reduce. And then we see the GEX ratio jump up. So again, we'll continue to monitor this. Same thing with SPX, sideways, GEX ratio continue to drop, most likely due to short-dated OTM or short-dated calls being reduced and not necessarily puts coming in to increase in the overall complex. So again, we've seen this multiple times. Obviously, just recently this dropped towards 1.6 where spot price stayed stagnant. And then we saw a move up to all-time highs in the SPX. So again, we'll continue to monitor this day over day, but it's just something to keep in the back of your mind as we see the GEX ratio drop. Again, a dropping in GEX ratio does not necessarily mean that spot price is going to follow. It just means we're seeing a reduction in either the numerator or denominator so a reduction in either the numerator or an increase in the denominator in that overall ratio. Call dominated for today, 0 DTE. We have transition 58.50, 58.75. We were watching that in trans there pre-market where spot price was getting to and stalling a little bit. So getting within the transition is going to be of most importance if we want to move up towards 58.75. Sorry about that. I'm going to go ahead and move that over. We see obviously the net stat command in the money puts above us 5,900, 58.50 is that in the money call strike that I just discussed. So getting above that 58.50 and holding is going to be important. We see the charm OTM call integral is slightly higher on the right-hand side. So we're going to have that overhead weight if we try to move up, as this is going to continue to grow OTM calls on the charm throughout the day, unless we see a shift in the net stat command. So that automated net stat channel is important to watch throughout the day to see if we see a change here. Obviously, moneyness matters if spot price starts to drift up and we start to get increase in the OTM call speculation, then we could see this net stat change throughout the day. So again, move up towards 58.75 would be the probability if we're above 58.50, and then above 58.75, 58.90 to 5900 would be that target overhead. We'll watch the volume command throughout the day to see what the call and put centroids, if what their slopes look like, and see where the significant amount of volume is transacting in the overall structure in the market. Below 58.50, we'd anticipate some more weakness down towards that 58.35 level. And obviously, we've drawn the drunken sailor range within there also. So it could be very choppy. You see a significant reduction in net OI at these strikes. So again, price could be pushed around very quickly depending on what the 0 DTE traders are doing. +1 DTE, total OI is very small, so obviously not putting a ton of weight in this, but we do see that it's call dominated above and below spot price, and we see above transition here where we're at. Obviously, if we open to 58.50, we'd be inside the overall transition for the +1 DTE. But +1 DTE is actually pretty strong, even though we have a low OI. So if we do get above the transition, we do have the path to 5,900. And then you do actually see 59.50 up there with PGEX. So significantly amount of OTM call speculation for +1 DTE. Just wanted to throw this in there. I know a lot of people have been looking at the charting app within our overall web app. Just a pro tip, this is what I do. Again, this is the TradingView library. So the bars are as close to accurate as what they can be of what TradingView allows us to populate in this. So what I would say is if you're using this for intraday, what I like to do is I put 0 DT on one side, I put the full complex on the other side. This will update automatically when we get the new scripts in, and you can monitor this throughout the day. If you're actually trading, obviously most people are entering on their broker side, so you can use the charts on your broker side to really drill down and get granular on where you want to put your stops or entries. But this just gives you an overall view throughout the day. If you want to look at this, I think it's great. You can pull up, quad tickers. You could have whatever you want running with 0 DT and full complex side by side. But this is just what I like to do. It's much easier. I can just glance over, look at the levels. Obviously, heading in this morning here, 0 DTE on SPX, we see 0 GEX is 58.50. And in trans, which I've already discussed, is 58.50. So really important. And COTMP is 58.57. So heading in the morning, obviously, I'll be watching 58.50, which is that all-important level. So we'll go ahead and go to SPX. So I've already drawn a line at 58.50. I'm going to move the drunken sailor range over here. So I'm going to reference that 58.30.35 on the bottom, 58.75 on the top for drunken sailor range. Important will be 58.50, obviously. In trans, we already discussed. And then P trans at 58.75. Okay, so that's kind of how I'm going to play today. If we're above 58.50, I'd look for a drift up towards 58.75. If it's watching, obviously, the vol M command. Below 58.50, I'd see a drift down towards maybe 58.40 first, depending on where the COTMC is going to come in. That's why I pulled up that charting command. I want to watch the COTMC level throughout the day also, and then a drift down towards 58.35. If we do see significant weakness below 58.35, I'd look to short down towards 5800, depending on what the direction of the call slopes are for the day. So hopefully that helps. Morning game plan there. If anybody has any questions, thoughts, comments, let me know, and we'll be able to answer those, and we'll be in the Discord in just a few minutes. All right. Thanks, everybody.